I'll start with you. When you look at Amazon's quarter, which was just sort of breathtaking in so many ways, the question I'd ask you is, if you extrapolate out over the next 12 months, does it get even better, or do you see downside?
Great. Thanks for having me on this morning. We think you'll face tougher comps in the middle of the year on the revenue side, but they have a lot of margin to work with AWS and advertising so strong, plus the COVID comps. So the bottom line does get better this year. Meanwhile, we do think cloud can accelerate. They lost a little ground to competitors this quarter on the growth rate, but with IT spending possibly rebounding, we think cloud can accelerate from here.
So the stock relatively flat, though, off of this news. It's well, I should say up about 2% right now. Steph, how do you play it?
Well, I think that the theme for both companies this quarter go round was not only better top line, but better operating income for both companies. So not only are they taking advantage of the tailwinds on the revenue line, but they're now starting to focus on profitability, Andrew. And that combination is a multiple enhancing event in my mind for both companies. If I had to break it down between Amazon and Google, Alphabet had a better quarter, no doubt about it. And I think Google also has upside on cloud margins because they fell 32% versus Amazon up 30%. So you have, once they get scale, you'll see leverage. So for me, I own both of these stocks, and I actually would be buying, especially if Amazon is weak, on the Bezos news, because they have a deep bench. Jazzy has a great reputation. He's been at the company since 1997. So I think it's going to be a very powerful combination, Jazzy and Bezos. And so I like them both for the long term.
But you think both of these, just so I understand, and then I'll come back to Justin, you think both of these stocks move not just on the numbers themselves, but get re-rated in terms of multiple?
Absolutely. I mean, profitability. Okay, Andrew, the operating income number at Amazon was $6.8 billion. The guide was $4.5 billion. And then they just raised first quarter EBIT by 40%. So there's that, right? And Google, same thing. Their operating income came in at $15.6 billion. Expectations were $11.8 billion. So they have a lot of runway. I think if they focus on profitability, they've got a lot of runway, especially taking advantage of the top line.
Justin, how do you think about the Google Cloud business when you comp it up against what AWS is doing right now? Because you saw those numbers get broken out. They're investing a lot of money in that business. They're losing money in the process, but it's fascinating to see. How do you think it ends?
Yeah, this is an investment area where they got in the market a little later than Amazon and Microsoft. They spent $19 billion last year building up their cloud business, which compares to AWS at $32 billion. So they're spending ahead of revenues. They're not as profitable as Amazon was as a later mover at this stage of their business, but their backlog is growing quite rapidly. Their overall margins improved each quarter of last year, and we do think they will get to positive margins in the next few years. They're negative 43% last year. If they can get to 20% and get to our revenue numbers, which are over $25 billion, you could see a $10 billion profit improvement on that business over the next 5 years, which we think is really interesting. And we do think they will show improvement this year. That's why they're disclosing it.
Justin, do you have any commentary, color, or feeling about this shift with Jeff Bezos? Do you think it matters? I've made the argument that I think a lot of the investors who've been in this stock understood that this was in the process. And to some degree, this is almost a formalization of what's happened over the last 18 months.
Yeah, I think investors do like Andy. I think that was a good point. Secondly, there are other big tech companies that have had CEO transitions that have gone well. You look at Apple, for example. And third, Jeff, in this new role, can be as involved as he wants. So I think it was a little bit of a surprise to some people. Others might have seen it coming. But I don't think people will be really that disappointed in the change, and will stick with the stock here.
If you could own only one of these things, Justin, which one do you own?
We put Google as our top FANG idea this year. We thought the stock had underperformed the group last year, and we thought the cloud disclosure would be helpful. And search is recovering very quick, and the search recovery lasts longer than the social recovery. So we have preferred Google for this year. I think Amazon has to kind of get the tough comps out of the way in the second quarter. And then as people look forward to acceleration in 22, the stock could have a strong second half of this year.
Shepard Smith here. Thanks for watching CNBC. on YouTube.